Hi, this is Randy Finney with the right side of the chart, and today is Monday, July 29th, 2024. It's 1:41 p.m. Eastern Time as I'm starting the video. Just figured I'd get one out today, kind of hit on the markets and some of the other things I've been covering lately. So we're going to start out here with a brief update on the NASDAQ 100. Really no change for the last couple days since Friday. When we hit that T4 on the NASDAQ 100 futures on the daily chart, and key support, also on key support on QQQ, and we've been bouncing so far, more of a consolidating. You can call it a bounce or a reaction. I always say a reaction I define as one of two things. When you're going down, a reaction when you hit support after falling is you either bounce, that's obviously a reaction in price, or a reaction in time where you consolidate sideways, and sometimes it's quite often a combination of both. This one so far, you can quantify it and just look at Friday's lows, measure up. It's about 2 to the top, 2.6, almost 3%. And as I've been getting out to you since Friday, this is the level right now to watch, about 19,390. And I believe once that pops, I believe it will pop, that should take us up to the next targets there. So I've given you, a minimum. I'll go over these on a couple different time frames. My minimum preferred remains 19,660. Very much open to the possibility that we can drift higher than that up to this, especially if it's taken out. Now, I fully expect no change in my trading plan since Friday. If we get up there, we'll most likely have a reaction off that level. I like to sell a little hair shy of the actual resistance level I'm targeting in case the buyers step in early. And then depending on what happens, I'll show you a better downtrend on the 60-minute chart. Better uptrend line on the 60-minute chart. So these are all, in the realms of not possibilities, because I only speak in probabilities, but in the realm of likelihood. Now, why do I, remain looking for some more upside after being so bearish and short? It's a combination of course, first and foremost, is always the technicals. And then also from experience, we've had a pretty big down, one of the biggest drops in the NASDAQ 100 in last couple of years. And however, we're heading into earnings. Earnings season's already in earnest. We're in peak earnings now, and I'm going to go over that. We have a couple big players coming up this week. So I don't have very super strong convictions on what the market's going to do. That's just the way I'm leaning right now. Still looking for a little more upside there. And like I said, it would be a level depending on if and when hit. I'd like to see it happen today. I wanted to see it happen on Friday. It didn't. I told you it'd be a stretch too. When I was doing the video on Friday, it would have had to been like what I say, a 3.5+% up day, which is possible, but it didn't happen. Of course, we never took out the resistance level. So that's it, guys. We're building like a coiled spring, or got this descending triangle pattern, if you will. And if we pop it there, that should take us up. And I'm going to talk about earnings real quick. So that's it. And that's coming off, of course, the divergent low right here. That's a 15-minute chart for you ETF traders. You have QQQ. Same thing. You have the 15-minute chart right here, the divergent low that we put in on last week right there when that target was hit. I believe that was Thursday, right? Wasn't it Thursday? Yeah, it was Thursday. And the comparable levels are right here. 467.83 seems to be the magic number. Pretty good resistance with this ascending triangle pattern. Pop it up, and the same targets I gave you last week. 473.91. Little shy of there. I would fully expect a reaction if and when hit. As of now, again, technicals are dynamic, meaning constantly changing. If we get up there, we'll see what happens. But probably get at least a tradable pullback. And then if they can power on up through that level, you got a big old fat gap that might want to be backfilled right there. And then it gave you a different downtrend line on the futures that comes into play. You could pull this one here, maybe pull this one down. And so same story. This is minimum target, and up to that downtrend line and gap backfill, that would be at this point in time, kind of a max potential bounce target. If we happen to carry up beyond there, you've got the trend line back test as a possibility. That'd be quite a bit higher, and so forth and so on. But right now I'm looking at this. Here's the thing, guys. I'm not expecting a big move because I'm about to get into the earnings and show you what's going on this week. Therefore, it's picking up nickels in front of a steamroller thing, as I've been saying. But a lot of nickels add up, so that's why I spend the energy and try to do it. All right, that is the 15-minute chart. There's what it looks like on the 60-minute chart. When we go to the futures, this was the 15-minute chart I started out with right there. Showed you 19,387. Oh, yeah, and I colored these lines up to make it kind of clear. The downtrend line off the highs. You've got a couple reactions there. And then, again, this is the... no, that's not the level. I colored up the wrong line there. Let me clear this out and fix this for you right now. The yellow line that I should have been highlighting was right here, as that's the minimum target. So I'm going to color that one up and make that yellow. So the yellow trend lines are the yellow lines are the key levels here. So there we go. 19,660. 60-minute chart. Do we have one here? There's a 60-minute chart on NQ, and you can see here, I'll tighten it up for you in the video, but you have multiple reactions. There's your uptrend line, and you can see what I've done down here. This is, again, just from experience and kind of my read on the charts, whether it plays out or not. We did have a divergent low on the 15-minute chart, as I showed you. We even had right here, as I mentioned, on the RSI, we had 60-minute divergence, positive divergence, that is, from that point to that point, although we made a slightly lower low on the PPO. So, what we'll probably do is come on down, and this comes into play too when I gave you my, when I revamped the targets on the daily chart. So hopefully that's not confusing to anybody. I gave you a post today that showed you near-term upside targets and then longer-term downside targets, and that's why you have the 15-minute chart. That's if you want to try to thread the needle, milk a few percentage points on a counter trend bounce, and then get back short. That's what that's for. And then so what I've done, I've extended these lines, so if we do have, whether we go up or not, we could just break down. This trend line is certainly a potential trend line that could trigger a sell-off, and then it could take us down, take out that previous lows. That's where, remember on Thursday, stop below those recent lows would be prudent, and we've remained above that. And if we come on down there, and it could take a little while, we will have that 60-minute divergence on all the indicators that I like to see before really reversing for more than just a few percentage point bounce. It's those 60-minute positive divergences on the QQQ, SPY, NQ, ES, especially when you're at when you've hit long-term support on the daily chart. That's what gets me really wanting to shift into a swing trade. Long side swing trade, even if it's in a bear market, even if I think there's more downside to come in the coming months, but I might play a counter trend bounce that may last for maybe even a couple weeks or so. We'll see. Again, I'm getting a little bit ahead of myself, but not really, because the markets move fast when the VIX is spiking, guys. So that's why I do these videos. They're long-winded, very specific, detailed, kind of plan A, plan B things, levels to watch. Because if you don't have a trading plan, if you're an active, a flexible trader like I am, and you like to go, you're just as comfortable shorting as going long, as I've said it 100 times or thousands of times in the past, you cannot be too late to the party. You can be too late to the party if you're long. In a bull trend, you can have the worst timing. You could be buying at the absolute worst time on all the rips, here, buying here, instead of on the pullbacks, and you're going to get bailed out. That's what a bull market or uptrend will do. However, if you're a short seller, and especially if you're trying to game whether it's just a corrections in an ongoing bull trend or a bear market, you got to be Johnny on the spot with your time, and you cannot stay too late to the party, because when the correction's over or a bear market rally starts, it's usually very swift and powerful. By the time you realize it's underway, or you're waiting for CNBC to tell you we're in rally mode, it's too late. At that point, you need to be booking profits. All right, so what I did, got out to you today. I think it was pretty clear. We had on right the day of the peak, gave you all these targets, but I added this one. I think this one will come into play, and that would mesh with what I just gave you on the 60-minute chart. that so I'm kind of leaning towards something like this. We'll go up, have a rally, maybe go up here that high, possibly T2 be about that former T2 was support at the time, about 19,790. Maybe carry up that high, maybe a little lower. That's where, again, hone in on the 15-minute charts, 60-minute charts. This is a daily chart, daily candles. But then another leg down and maybe get a tradable bounce off that T5. That's the one I didn't have that before. I had a pretty big fall between T4 and this was the old T5 right down here. And there's also support level I left there. I didn't mark it as a target. Again, we'll see. I always say the charts are dynamic. So if we start to get down there, I'll look and see if that's an area we're likely to have a tradable bounce off of. I'll let you know. But that's it. So if we could get a decent bounce here, it'd be nice, and then set the stage for maybe a more powerful next wave down that could take out T5. We'll see. I just wanted to make sure you get those targets out. And then I don't think anything, I didn't change them yet on QQQ on the daily chart. The swing targets I gave you, these go all the way back to June 26th, I think it was, all the way back here, right before the market peak, give you that market top range. Got very close, 1.5% to the top of the range. And so these targets I'll just, I'm maintaining for now. And I always use both, NQ and QQQ and SPY and ES together. So these are nice clean targets. There's I'm going to add one right here. That's what I'll do. Since I added one today, I'm going to put it right here. I'll mark that I added this today, target added, and we'll call that T3. I'll resequence them later. So what's today's date? 7/29, and then I'll just note that there. And that's it. So because I've been talking about and calling for a move down to the 200 days forever now, not forever, but for the last few months, coming to visit the 200 days is the next, downside swing target. And we haven't visited those 200 days since back here. So that would align with that. And I didn't just randomly place it on the 200s. There's also was resistance here, support all along here, support. Then we broke that support. It became resistance where we traded under it for a little while, a couple weeks there, and then popped above it. So it's a price support level. I have it at 431.80, comes in with the 200s, and that is my next target. So whether we just crap out this week, the catalyst here's the thing. I don't expect major fireworks until at least a couple of the big earnings reports this week. Let's flip over to that. Let's get that out of the way because that's everything right now. And so where I was starting to go earlier and tell you is that the earnings are usually the market will go into somewhat of a holding period when the big earnings reports are coming. Again, everything else kind of doesn't even matter. It does collectively, but it's all about these big market-leading FANG, big tech stocks, Mag 7, whatever you want to call them. So I'll rifle through it real quick. This is today after the close. Nothing that's going to move the market really. So tomorrow morning, this is Tuesday before the open. You can see PayPal, Pfizer, some, again, non-tech stocks, some big caps in there, mega cap stocks. But this is where the party starts to get going here is Tuesday after the close. And of course, remember, you can always access the earnings calendar from right side of the chart. Just go to any of the, go up here to the site, go to resources, and then down here, earnings calendar, click on that link and it'll load it. So here's where we were. This is the earnings calendar for the week, Tuesday after the close. AMD, Advanced Micro, big one, Microsoft, and that's really all we need to know right there. So that's going to begin to set the tone. That certainly has the potential. All I can tell you is it's almost guaranteed volatility this week. Could be volatility to the upside, could be volatility to the downside, and probably going to be both. Big swings up, down, all around. Don't overreact to the initial move after earnings. That's typically not always the one that sticks. Sometimes it can be, but quite often it's not. Trading strategies I like to share during earnings season. If you're swinging for the fences here and you're playing the long game, in other words, you're positioning for those longer term targets I have to the downside, or you're bullish and you're looking for new highs and beyond. You're going the other way that I'm positioned now. Oh, well, actually, I'm long at the moment, but no, I mean longer term outlook. and you don't want to get shaken out. You have conviction on where the market's going. You have a trading plan. You might want to widen up stops around earnings because of the zigzags, the volatility. These things, companies like Microsoft, they tend to report in after hours and can rip up and then turn around by the end of the session or the next morning and rip down. And it could be a 10% in each direction turnaround. And that's going to have an impact on the market. And so what they're going to do, they're going to clip the stops of the short sellers, then they're going to clip the stops of the longs. The stops are a necessity in trading, but sometimes you can loosen them up again, depending on the charts, everything else. You have to have some hard levels at some point or some stop losses. You can also lighten up positions, and I'm trying to speak to different traders. Some people are more aggressive. Some trade in concentrated positions. Others are more diversified, so it really shouldn't matter as much to them. All I'm trying to tell you is you need to factor that into your trading plan, that you're going to have the volatility this week. So there it is. So let me move through this a little faster. Tuesday after close, Microsoft and Advanced Micro. Wednesday morning, Boeing, MasterCard, a couple big ones there. Wednesday after the close, Meta, Qualcomm, Carvana. Carvana I've mentioned as the next shorting up coming up here. Just cover that as a trade idea because I did recently set up pending a break of this trend line right here. This is the uptrend line. I'll draw it for you nice and clear. Comes off the October lows. Beautiful, very well defined. We're dancing on it right now. And this stock, I pointed out all these divergent highs, or most of them, I should say. And they've all played out for beautiful shorts. 56% drop, 36%, 28, 25, all along riding on this uptrend. But this uptrend is wedging. Why do I think finally we're going to break it and have a much deeper drop? It's these big divergences. I'm zoomed in there, but that's a big, giant, fat, rising, bearish rising wedge. Earnings are coming up, so obviously it's a huge gamble. You might want to wait and see which direction it goes, but I like to play the game that I do every earnings season. Which way are they going to go? And as I often say, if I look at a stock that's due to report and I don't have a strong opinion on the chart, bullish or bearish, it's a crapshoot, complete coin toss. If the chart is clearly bullish or bearish, from my experience, that is quite often the direction the lasting move will go. And it doesn't matter about the after hours pop or drop. Ultimately, in the coming weeks to months, I believe the stock's headed a lot lower based on this. And once you get the trend line break, especially after earnings, that's the primary trend line here. I have an alternative secondary potential trend line comes in there, and there should be a lot of downside on that one. So didn't want to digress because it's not a digression. It's a trade idea. I'm covering who's reporting. Lam Research, Western Digital, just a lot of stuff coming up this week. And that's Wednesday after the close. Thursday morning, and then to take it home this week, Amazon, Apple, and Intel. Look at that trio of big techs. So that's it, guys. And so again, the takeaway is market's likely to grind around as it's been doing for the last few days until we get these big tech companies reporting. Get a couple starting out on Tuesday after the close, and then this will take it home by Friday's trading session. We should have a clear idea of which way this market wants to go, at least for the near term. And I would love nothing more than to see a little more upside, be able to find a very ideal level to get back on some swing short exposure. And I still have long-term accounts. They're going to stay with a core swing short holding, but not micromanaging those, not as actively. My active trading account, that'll go long short on a in and out throughout the day. But my preference is, again, to game a little bit of a rally, and to be ideally to be, hopefully, again, depending on what level we get to get back into some core shorts in front of these guys if it looks like the right time. If not, I can stand aside, let them report, get in the next day. I just think if we can rally up to a nice resistance level, and we've got some other reasons to be short heading into Amazon and Apple and Intel. I'd like to get in front of that just in case they open down with a bang on Friday after they report on Thursday after the close. Let me see what else I have for you. I kind of didn't mean to, but I skipped over ES. I do very much watch the S&P 500. I'll get to SPY here in a second. There's ES. ES, remember, coming off very good support right there, 54.41, bouncing, positive divergence right there at that point. You can see the divergence lines as I have them drawn out here. So that was a divergent low right there. We have seen a rally. It's been a tradable rally. If you zoom in nice and tight, you can see, although I had this line here at 55.20, right now, and it was support, and we've gone through it a few times. I'm going to add another line that needs to pop. It's comparable to the level I've given you on NQ, and it's the same reason. It's that recent high from last week. I think it was Thursday again, and then these recent highs here. So we pop that. We go up. These are the targets I gave you before. T1, which is my minimum and preferred bounce targets, yet to be hit. I think we will hit it. I think a pop over that 55.33 level I just gave you or so will do it the trick. Max upside target. And, I can't rule out a back test of the trend line. So if and when we get there, I'll be talking about that as a potential objective short entry. Got big resistance here too. So let me just say this is the max area. If I want to, use the word properly, maximum means how far could I see this bounce going? It'd be up to there for a back test. Be a beautiful shorting op, especially if it comes in with this resistance zone right here, about 56.22 up to about 56.30 right there. But first things first, we're not going to get there if we don't pop this. This could all be just a, a little dead cat bounce before we do this. Again, I just don't see a meltdown until we get some big techs reporting, but that's coming up soon. And for you SPY guys and gals, SPY, the S&P 500 ETF, there's a beautiful trend line which was taken out recently, and we're below that trend line. That puts us on a pretty darn powerful sell signal. The other board I have is the one I gave you with the target. Same thing. We're below the trend line there, the yellow uptrend line that comes off the October lows. And this is still my first target, which I believe will be hit. And it's a matter of, do we go up and back test the trend line? Very open to that. Very, very much open, especially when you look at it from the daily chart here. I mean, it's not much of a run up to get there. Back test that. That'd just be an ideal scenario. Get a bounce off that level, come on down to the next target, hit the 200-day moving averages, and the next target have another tradable bounce, most likely, and then continue on down to these guys. So near term, looking for a little more upside. Intermediate to longer term, looking for more downside. It's as simple as that. And I will react accordingly. If we don't, that's it for the bounce, and that's all we're going to get. Then if and when it's time to get short again, but again, I wouldn't get too heavy anything in front of those big earnings. Again, just keep that in mind. It's going to cut both ways. It's going to be volatile. And let me add a level here. See this gap right here? I'm going to put a line right there because that's pretty much where the S&P hit and bounced off of the other day. And it also held the 50-day, 1 day under the 50-day moving average, and we're back above the 50. So that's basically a pullback to the 50-day and a successful test so far. So that is the condition of the markets. I gave you updates on the grains today. Like I said, if you want charts for WAT, wheat, corn, soybean, wheat needs to get back above that $5 level, but you've got nice divergence building. It's the story of these guys. They get these divergences. We've had these rallies, and I still think the RR is very favorable. I think the downside's minimal on the grains, soybeans, wheat, and corn. It's just a way to diversify. Another divergent low. It seems like they just can't get started lately. But sooner or later, these divergences are likely to play out for a lasting trend reversal, get up to these additional targets. Natural gas just can't get out of its way lately either. I just haven't been updated. I told you I've been hyper-focused on the markets now lately because of the volatility. But there's a big divergence continues to build here. We had divergence at that point right there, and it's the same divergence, really. It's just gotten larger. So in other words, the indicators are making higher highs, prices making lower lows. We need to pop back above this level, about $13, and that should run us up to the downtrend line, and then these other targets I gave you before. For you futures traders, this is NG, nat gas futures, September contract, downtrend line off the highs right there. Potential target, you got to have a positive divergence right now. And I don't have them drawn here. I just rolled these recently. There's your positive divergence, indicators making higher highs, prices making lower lows. A short-term downtrend line, if and when popped, should take us up to that 2178 target, and or the downtrend line. They come in around together. Next resistance slash target's about 230. And then remember, there's just big positive divergence on the daily chart of NG. And so there's the potential for more upside there. Crude, I'm just not, I'm not feeling crude right now. I'm not feeling gold. I keep getting questions about those. USO, divergence forming. If anything, it looks like it's ready for a pop here soon. Positive divergence, that's support on the 60-minute chart. Let me look at my futures. Yeah, crude. Oh yeah, crude's looking good. If it can come down a little bit more, right here about 74.90 is really nice price support. You can see all these reaction lows there, and then we broke it, came back, hit it, couldn't get through, consolidated, popped it with a very impulsive breakout. So look, we're right above that support level. Again, I would call that good, not moderate, but good support. And also, it just broke out of this downtrend line recently after that divergent low, and it's back tested once, twice. We're back testing now, so it may not get there. You could take it now. It's not much lower. If you look at it from our perspective, there's only about maybe 0.7%, half a percent or so, maybe down to that level. I just kind of rough measured it. Positive divergence here on the 60-minute chart. So there it is. Crude long here down to 74.88 with a stop somewhat below, ideally on a 60 or even a 120-minute closing basis to let it, the powers that be love these little stop rates. So, you might want to let them punch you through like that. Give it a little room and time or price or both. And and then game it on the way up. You can see potential targets here. Probably run back up to this downtrend line. But the bigger picture, crude, kind of like gold, it's been chopping around. If you look at a daily chart, the USO, it's just been chopping around back and forth in kind of it's tradable ranges. You can certainly, and I just gave you the next swing trading op. And look, it's also, there it is, also the bottom of my yellow zone. I've given you shorts here, and again, most recently here from the orange zone, we shorted it and swung it down. A good part of that at least. And now we're up there at coming up on the next support around 74 on USO. Gold, same thing, just kind of slogging around. Intermediate term, you've got that big divergent high that could play out for more downside, take us down to 211.53. But when you look at the 60-minute chart, and that's all we've been doing, or I've been doing, highlighting to you, swing trading, divergent high, divergent low, divergent high, divergent low, divergent high, up, down, long, short. At the end of the day, gold bugs are just pulling their hair out because they're going nowhere for months now. So that's all I see at this point in time. And I don't have strong convictions right now. This is kind of, we're right smack in the middle of that range, kind of no man's land. So we're not at good support. We don't have positive or negative divergence. So there's your update. I'm standing aside at this point in time, waiting to re-engage gold and silver in the miners. Divergent high on the 10-year bond. This is CN, the 10-year Treasury bond futures. We had that bearish rising wedge there. Breakdown, sell signal, hit this support level 110.207. Pushed up, made a ever so slightly a marginal new and still divergent high. And so, I don't have a position here in the Treasuries. I just want to point that out. We're likely, if you want to take a shot in and hedge up indirectly to index shorts. IEF is your comparable ETF to trade the 10-year bond, and that one is you can see here back into my green zone, but it's spent a lot of time in the orange and yellow zones. If you're new to the site, that's just something I created back here a while ago, kind of warning what it would do to the stock market if and when we entered the zones and when we were up here. And it did. We got in the yellow zone, market started to correct. We got in the orange zone, we had the deeper correction. So it just means that the yields are going, when the bonds are rallying, yields are falling. And so that's quote unquote better for the stock market, but we've also seen a flight to safety bid. I conditioned this all along that if you saw bonds rallying with the stock market falling, that's a flight to safety bid. And so that's not necessarily net bullish for stocks like it is in a normal environment where falling yields are good for stocks. When they're falling because of flight to safety, because institutions dumping stocks, which they have been, big techs, and buying treasuries, that's not a net bullish condition. So that's it. So the 60-minute divergence, just like this last divergent high, gave you that correction right there, and just like this divergent high gave you this drop here, and that divergent low right there gave you this rally here. You know, this is just telling me we're at resistance, and there's probably going to be a pullback here in the 10-year bond, meaning a little spike in yields. And that is obviously, anytime yields go up, it's a net negative for the market, unless they're going up from super low levels, and it's not going to impact the market. But we're at elevated levels. Remember, that's the important thing. When you look at the yield itself, which is TNX, that's this upside down. This is just a 60-minute chart, but you go to the daily chart, you even go to a weekly chart, turn off all my lines, you can see we're at levels now, and this is why the market's been very rate sensitive. You're at levels not seen since back the last time there were this level here was right before the financial crisis. And that's where the market is going to be hypersensitive at this point, and that's why I have those zones. If we tick back up, yields go a little higher, we get back in the orange and then the red zone, and that's not good for the market. So if we can fall, and we're falling for anything other than the stock market taking it on the chin and institutions dumping stocks, then that should be a net bullish event for the stock market, and could be the catalyst for another move up, maybe even new highs. I don't see new highs now. I think the top is in. Made that case pretty clear, but we'll see. Only time will tell. All right, so you have my near-term, intermediate-term outlook. I updated you on the grains, on crude and natural gas, oil, gold, and let's just keep it here so it's not a super long video. 31 minutes. I've been able to get some of the sub 20-minute videos out lately, and I want to continue that trend. This one was a little longer, but I was able to cover everything. I had a couple requests lately for updates on those things. So that's it, guys. Takeaway is big earnings week. We're going to see some volatility, grinding back and forth. If you're very nimble and active, you can go all the way down to the 1 and 5 minute charts and game, pullbacks from resistance, drops to support. You can actively trade. I'll go down, for the site's primarily about swing trading, so I'm just sharing with you the 15 and 60 minute charts right now for active traders, as well as swing traders looking to either reposition into shorts if you covered last week, and or if you're already positioning back into shorts. Those are objective levels to scale in, resistance levels, and there are also those resistance levels are objective levels to stop out of taking above. At this point in time, like I said, I can see a bounce back to the uptrend lines, but we really shouldn't take back the primary trend lines in both SPY. There it is on a weekly chart, same trend line there. But on the 60-minute chart, you can see it here. Those trend lines on SPY and QQQ, now that they've been broken, I'll tell you this, if they do take them back, by the time you get there, we'd have to rocket up there, you're going to be really close to the highs. So on SPY, I'm okay with a back test. On QQQ, look, if we get there, I'll let you know my thoughts at the time, but let me just measure it out. If and when, and assuming it took, you can see how quickly we left the trend line here, but now it's higher up because trend lines are dynamic. So from where we're at today, I'm just going to measure it. If we got here around this time, yeah, it's doable. Okay. If it happens quick because of earnings and we get up to backtest that trend line on QQQ, we'll still be off the highs pretty comfortably. Again, if it happens soon, let's say by Friday or early next week, in which case that may offer an objective short entry, re-entry. But anything much above that, be threatening the new highs, may still get us to the very tip top of the market top zones. We'll see. But again, now I'm getting too far ahead of myself. So let me wrap it up here. Let's just watch these near-term levels. Again, pop of the recent highs right there should take us up. Potentially a break of the near-term uptrend lines could trigger another move down to test these lows or maybe undercut those lows. But it's going to be chop and slop for the next couple of days to get the big techs reporting. All right, I'll wrap it up here. This is Randy Finney with Right Side of the Chart. Have a great day.